Hey, this is Tim, licensed loan officer. Welcome. Today we're going to talk about how to buy a home when you're self-employed. Thank you so much for watching and welcome to the channel. On this channel, we talk about first-time home buyers. We talk about leveling up, buying investment properties, improving credit, saving for down payments. If you like those type of topics, please subscribe to this channel. Love to have you here. Today, we're going to get into self-employment. Okay, I know it, self-employment. Being self-employed can be difficult buying a home only because lenders go off of your taxable income, okay? And when you're self-employed, you don't want to show a lot of taxable income because it means you get a higher tax bill on April 15. So it really puts you kind of in a bind, You want to show income so you can use that income to qualify for a mortgage, but yet it really will raise your taxable income and give you a big bill. Also, your accountant, their job is to help you find loopholes and save you money with deductions and things like that. So it can be really tough to buy a home as a self-employment borrower. And then also, if you're 1099, that is considered self-employment. Even though you work for a company and you're kind of like an employee, but you're technically 1099. So in the mortgage world, we consider that self-employment. And again, that puts you in the same boat where it can be hard to qualify for a mortgage. So in this video, I'm going to give you some tips and advice and multiple ways to buy a home if you're self-employed. Okay, let's get into the presentation. Okay, perfect. Let's get into it. So this is very important. And the first thing you want to do as a self-employment borrower is you want to file your last 2 years of tax returns, okay? And the way it works in the mortgage world, we look at the last 2 years. We look at, your 1040s, we look at your Schedule Cs, and it also depends if you're a sole proprietor or if you're an S Corp or LLC, that plays a part. But basically what we consider self-employment if you own more than 25% of the business. So you want to file your last 2 years of tax returns, and then hopefully you want to show a little bit of income, okay? And what we do is we add up the 2 years and we divide it by 24 months. So we average it out. So sometimes people may say, I showed income this year, and then this year I wrote off everything. So the way that would work is that the year you showed income, they'll take that and divide it by 4. So it can be really difficult. But also what they do ask for too is a profit and loss. So we ask for a year-to-date profit and loss. And what we're looking for is to see is that income steady with the last 2 years of the tax returns, and hopefully it's not declining. So to give you a tip, if your income declining more than I think 20 or 30%, then you might not qualify. From a lender standpoint, it's like you're trending in the wrong direction. So you want to show some income. You want to file the last 2 years of tax returns. And then, like I said, the mortgage lender goes off of taxable income, which I kind of just went over. So let's go to the next one. Now, if you cannot show enough taxable income for whatever reason, whether you're 1099 or own a company or a partnership, whatever, you can explore something called non-QM. What non-QM means is a non-qualified mortgages. So most mortgages, I would say like 90% of mortgages are qualified mortgages. A qualified mortgage is like a conventional mortgage, a FHA mortgage, VA, USDA. I mean, all those standard mortgages are called qualified. And a qualified mortgage means we have to verify your income, your assets, your credit, and all that good stuff. But with a non-QM lender, they have products that they won't verify income. They don't care about your income. What they're going to go off of is your credit and your down payment, okay? And the sweet spot for these is a 680 or higher. Actually, if you can be at 700, that's even better. You basically want to be a self-employed client that has good credit, you have a lot of money, you just don't want to pay taxes. Now, if you're self-employed with a little bit lower credit and a lower down payment, it's going to be tough. Now, the benefit of doing the qualified mortgage with the tax returns is that you can qualify for those first-time homebuyer programs. Those first-time homebuyer programs give you that 3% down. It can even give you a grant or a down payment assistant. But again, you're going to have to qualify and show taxable income. Now, if you already know if you write off a bunch of stuff and you don't want to pay taxes or you don't want to show income, or if the business is up and coming, then you want to go non-QM route. And the way that works is you want to have a good credit and you really want to put 20% down. Now, sometimes if you have 700 credit, you might get away with putting maybe 10% or 15% down. But I would plan for 20% down plus your closing costs, and maybe you can have the sellers pay your closing costs. We just put 20% down, because what it's going to do is going to offset the risk for the lender, because the lender's not going to ask for your tax returns or your 1099. But if you put a down payment down of 20%, you lower the risk. So they say, okay, there's no way he's going to walk away from this property. He just put 20% down and he has good credit, so he pays his bills. So that's the kind of the sweet spot. And that's what I recommend a lot of times with self-employed borrowers. Why go through all the headache and uploading documents and business license? Like, a lot of times with the qualified mortgages, it could be a lot of paperwork. But if you could put 20% or 15% down and not even avoid that, it's really straight to the point. And then another option is that you're still going to put less than 20% down, but you're going to do a bank statement loan. What a bank statement loan is that they're going to take 12 months or more likely 24 months of your business bank account, and they're going to look at the deposits, add up all your deposits. And they don't give you 100% deposit. They usually give you 70% or 80% or 90%. It depends on the lender or the guidelines. But they'll add up your bank statements, and that's considered income. And when that's considered income, then that lowers the down payment. So bank statement loans usually don't require 20%, but it really depends. Remember, this is non-QM. With non-QM, the bank or that lender makes their own guidelines and give you their own money. The way it works with these qualified mortgages, they do give you their money, but then they sell that mortgage to Fannie or Freddie as a mortgage-backed security. So, and it's good to have a game plan, because if you're prepared, then you already know, okay, I'm going to make my deposits. I'm going to keep depositing things so I can show high deposits and I can qualify for more home. Or I'm not going to do that. I'm just going to get a large down payment and have good credit, or have a little bit good credit and then do a bank statement loan. So it's good to do this. Too many times borrowers, click on things online and, getting, realtors involved, but they haven't figured out their financing. So the quicker you can decide, which option you're going to go and how you're going to figure it out. And there's another way you can do this too, is that you can have a co-signer. So if someone else could go on the mortgage with you, that's W-2, and not even use your income. So that's a way, if you have a good friend or family or someone that can go on the mortgage for you. So I hope this gave you some tips and advice. And the best thing I can tell you is prepare early. Start early. Start saving. Decide if you're going to do a bank statement loan. There's so many different ways you can go about doing this, or showing income and paying taxes the last 2 years, or making your deposits and doing a bank statement loan. Both the bank statements and the non-QM, will require a little bit larger down payment than 3%. But again, if you want to do 3%, you can get a co-signer if you don't have enough income or need a little more income. But let me know if you have questions. I know it can be difficult to qualify as a self-employment borrower. And I know you're not doing anything wrong. You just own a business. And hey, I want to own a business, and it's great owning the business. It's rewarding. That's one of the ways people get wealthy. But again, it can be hard to qualify for a mortgage. But I'm here to help you. And if you need help or looking for a pre-approval, things like that, reach out to me. I'd love to talk to you. All right. I know this video is getting a little long, so I'm gonna wrap it up. Please subscribe to this channel, and I'll see you again on the next video. Thanks.